Well, it's been a busy week, mostly with business issues on my side, not so much the market. I haven't really done anything this week. I did a couple of things. So I just haven't had time to get to the Q&A. July 17th, Thursday night. Normally I have this up by Thursday morning, Wednesday morning. I have been late. Let's go. I'm currently short shares of a stock. My broker restricts the cash. This is a long one. My broker restricts the cash proceeds of the sale. I cannot use that cash for anything, and they don't pay me interest on it. That's probably because they want to earn the interest on it. I want to change a position for a position constructed using options. They don't restrict the proceeds of selling options. They don't restrict the proceeds of selling options because options are marked to market each day, so they have to make sure that they maintain the proper liquidity, and you must maintain the proper liquidity. But the proceeds of the short sale, they don't need to give that to you. Your margin is 30% of the amount. You have to post that. But the base of the short sale is not liquidity needed, so they probably earn an interest on it. I can use at the money options to create a synthetic short, or I can write a call with a strike price that is near zero. You don't want to do that. I have a HELOC that charges me 5% interest, and I have plenty of buying power in my brokerage account. I'm considering selling the deep in the money call and using the proceeds to pay my HELOC. Ooh, you don't want to do that. My understanding is that I'd be paying the risk-free rate when shorting the call, which would make it profitable to send that money into my HELOC. Yeah, you're conflating the risk-free rate with a risk-free position. Selling deep in the money calls is a very risky position, not a risk-free position, because you have call risk. It will be called away from you, and then that will give you a short position, right? So you'd have to have the liquidity to maintain that, because now you're going to have to post a lot more margin. The deeper in the money, the more you run the risk of it being called away from you. Since it's a HELOC, I can reverse the trade anytime. Liquidity on the deep in the money call isn't great, and I'd probably end up losing a few basis points on it, but I can set limits using multi-leg trade. Yeah, I would just ignore this. Whatever you're thinking, just move away from that altogether. I know you've been very adamant about the deflationary effects of AI and how the Fed and Pow should be focusing more on those. Don't you think there could be more temporary bottoming out of inflation before the longer-term efficiency gains of AI take hold? How long do we wait? Been saying for how many months now? Well, the long-term effects, the long-term effects, the long-term effects. I use it every day and I'm super productive. How long does it take? No, I disagree. So you have tariffs, and I guarantee you, for every company that has to think about raising prices, these are businesses. I've had a business before. Before you raise prices, you think, because heck, Amazon raised prices on me, Google raised prices, everybody that was a supplier to our website raised prices. You have to think about, can we cut costs anywhere? Can we become more efficient anywhere? Before we raising prices is your last resort. It's the lazy way to do it. And if I can find efficiencies before raising prices, I'm that much far ahead of the competition. I guarantee you every company out there is saying, we're using this stuff. 68% of businesses now are, to some degree, are using AI. That the manager who is incentivized to lower their operational budget is not looking at the staff saying, come on, let's find a way. What are we doing here? Everyone's got eyes on this. Everyone's got eyes on this. There is no long term, like in 3 or 4 years. This isn't some piece of equipment that has to be purchased through CapEx and find their way through the system. This is $26.99 a month per person. This is being used. The other big thing of the tariffs, which we don't, tariffs are inflationary. Tariffs are inflationary. What is inflationary is increases in disposable income. That's the biggest inflationary push. If we're thinking, well, we have a strong demand, strong job market, that's inflationary because of increases in disposable income. Disposable income. That is your income minus taxes. That will give you your disposable income. Tariffs are a tax. So as we're collecting the tariff money, prices go up because of the amount of the tariffs, but disposable income goes down by the same amount. Less disposable income, less demand. Less demand, well, you got to lower your prices. You can't keep raising your prices if you have lower demand because you're going to have too much supply. So the tariff takes disposable income out of the system, which lowers aggregate demand, which is disinflationary. By the same dollar amount, the tariffs are inflationary. Yet no one talks about that. No one talks about AI. They're only focusing on one variable and saying, aha, that's all we're going to focus on, and the market has this narrative in its head and it won't let it go. You know, like a pit bull grabbing a baby's arm. It's not going to let that thing go. That's a terrible image, but that's what came to my head. If inflation starts ticking up over the next few months before the deflation attribute to AI starts kicking in, I personally believe that inflation is relatively tame in the face of the tariffs, as companies are holding out on increasing their prices till there's more certainty around tariffs. Why raise prices if the taco holds true and piss off their customers? Now, if taco doesn't hold true, prices may start rising. It's only prices on goods. Let's put this in perspective. Goods is 18%. 18% of all the transactions in the U.S., goods make up 18%. The amount that's coming in to the country is not 100% of the goods that are sold in the U.S. It's a percentage of the goods, and of the stuff coming in, there's carve-outs for 20% of it. So overall, it's a really small amount. They say they're generating $20 billion a month in tariffs. You're talking about a $30 trillion economy. So $20 billion a month in tariffs mean that the stuff coming into the country is $20 billion more expensive in a $30 trillion economy. Even if you go for the full year, $240 billion in a $30 trillion economy. I mean, come on. You're telling me that businesses can't offset that $240 billion? A little bit here, a little bit there, a little bit here. Now this $240 billion, when we say it's a $30 trillion economy, we have GDP equals GDI. Well, some of this 240 gets transferred from the consumer to the government. So this ends up in the TGA, which means that it leaves the banking system and enters the TGA, so it's not available for anything. So the amount of money that disposable income drops is the exact same amount of money that prices go up. And if you put it in perspective, $240 billion over the course of the year against a $30 trillion economy, how inflationary do you want it to be? Think it through. Right? I mean, services are 82% of the economy. This is we're focusing way too much on these numbers and not putting into perspective by saying, well, how much is it really? If I said to you, I'm going to raise the price of this particular thing that I supply by 200%, you'd say, oh my God, that's inflationary. That's inflationary. Yeah, but the thing I sell is only 1 cent and it goes into a $20 product. I'm going to raise it to 3 cents. Oh, well, that's a rounding error. Yeah, these are closer to rounding errors than anything else. And again, even if it were more, even if it were $1 trillion in revenue, which would be 33%, 25% tariff on everything across the board with no exceptions to anybody anywhere and no drop in imports, you'd get $1 trillion a year. But you'd take $1 trillion a year from people who have it that can no longer spend it. You'd remove $1 trillion in purchasing power a year, which would lower the amount of aggregate demand. I get very frustrated when I hear inflation, tariffs, and I think, but you're ignoring everything else. The tariff is a tax, and I guess people are afraid to say that in front of Trump. You got to think, no, we're charging the other country, but it is a tax on Americans. It does lower their disposable income. And if it lowers their disposable income, it lowers aggregate demand. Period. Well, I think I made my point here, right? You mentioned using Gemini for multiple choice creation. My suspicion has been that the questions and answers don't closely reflect CFAI material. You have to train that thing, okay? You can't just ask it to generate a question. If you ask it to generate a question, it's going to give you garbage, and it's going to, just say, well, I know what a multiple choice question is. I know what you're looking for, and it'll give you garbage. You have to talk to it in the proper language, which means you have to be an expert in assessment. You have to tell it what type of questions you want. What's the logical structure? What's the reasoning that's involved? What's the level of thematic cohesion? You have to tell it the entire setup. And then you have to get it, the best thing to do is tell it to repeat to you what you just said, so that you can see what its understanding is, because what you say and what it understands are two different things. Now, an LLM does not understand. So you have to write a prompt in such a way that you know it's going to search the thickest part of its network, not thin parts, because then it'll hallucinate, but the thickest part. It's an art. When you first start doing this, it'll take you almost 2 months of work, and you're going to want to give up. You're going to say, this doesn't work. But then you have an idea of the question that you want. And here's the question it gives you. And there's a big distance between them. You say, there's so much work to do, but do the work. Then you give it back to the LLM and you say, I want you to compare what you did with what I did, and tell me your understanding of the gap. And it'll tell you the understanding. You say, now I want you to remember that. Do it again. And you'll find that the question moves a little closer to your benchmark. And do it again, and do it again, and do it again, and change your prompt and do it again, and change your prompt and do it again. Make your prompt bigger, make your prompt smaller, change the language. After 200, 300 iterations of your prompt, you'll be close. You'll find that 80% of the output is about 80% good, which means 64% of the work is being done for you, but you still must be an expert in assessment. It helps to be an expert in logic and reasoning. So if you have a background in debate, let me tell you something that helps a lot, because you are debating with an LLM in a very logical structure. That's the best way that it understands. And you can inch it towards you, but it does take repetition, and learning and experimentation. You got to reward the model whenever it does well, so that it reinforces what it's done. You got to remember that these things forget quite often, that they'll forget after a while. So you have to engage in repeated reminder. It's a whole science of what we're doing here. There's a whole structure behind the work that you have to do to get there. But when you get it there, yeah, it's pretty good. If you find that the LLM is not giving you what you want, here's the tough part though. Is it the model that will eventually never give you anything, or is it your prompt? Or is it the feedback mechanism you use? Or is it the restrictions that you put on the model? Sometimes if you let the model, a little bit more free in what it can use, is it the level of temperature that you set? Have you got the temperature too high? Have you got the temperature too low? Right? It's a lot of work to get to where you want to go. Now, if you're using Grok 4 and you're saying this is just not working, and you've been at it 2 months and 300 iterations, I would say, yeah, because Grok 4 sucks. Of course you're not going to get it. You have to do this with 5 or 6 models all at the same time. Give it all the same prompts. Now, the types of prompts I give Gemini are very different than what I would give Manus. Manus responds differently. OpenAI responds differently. I have to say some things to OpenAI that I don't got to say to Gemini. And then over time you'll find that one model is consistently really good at it, except for some things. Yeah, that's just what we have. So, ways you might get around this. Well, it's like saying to me, I'm trying to forecast the stock price for this company by just forecasting revenues and then using the same net income margin, and I'm not very precise. Are there ways around this? I would say, well, I would have to teach you everything there is to know about analysis and financial modeling. If you say, is there any way around this? Yeah, but it's it's a long process of testing and iteration, which you must do. But if you are not an expert in assessment, if you don't know the language of logic, the language of reasoning, it's going to be hard for you to tell the LLM what you want. It's much like I'm not a lawyer. If I ask it a legal question, I'll get an answer. I'm in no position to assess whether or not that answer is even useful. Plus, if I were a lawyer, I'd know how to ask it a question in the language of law. Do you get that? But I'm not. So I don't know how to ask it the right question. Given you were on the sell side, and that it was a private transaction, could you explain how you approached the valuation of your company when you sold it to Cerify and how it relates to CFA readings? Well, private equity has a particular metric that they use, which is an adjusted EBITDA with a company stripped out of cash and debt. So it's your EBITDA, and whatever valuation you arrive at, you must use the proceeds. You strip out cash and you pay off debt. You must give it a clean operational statement with no liabilities and a certain amount of working capital. So that's all negotiable. Your metric is not going to be really negotiable with private equity. Your multiple is your most negotiable part. And that's really going to depend on how many other candidates there are that they have to choose from. The growth rate of your business, the popularity, I guess, or the brand recognition, the brand strength of your business. It depends on a lot of things. But the better run business you have, the better your competitive position, the better your growth rate. Obviously, it leads to higher multiples, right? But you don't pick and choose the multiple. It's pretty much, this is the multiple we're going to use, so you work with that. I can't divulge anything. I mean, I have an NDA. I can talk about the process, but this is true for any private equity firm. But I can't tell you a number. I can't tell you a multiple. This is, if the private equity firm wanted you to know, that would have been in the press release. Unless mistaken, it seems the approach in the sector analysis is very slightly different than what I've seen in CFA readings. Very slightly different, and you picked up very slightly different. Okay. Where the CFA framework explains to assess the business model to identify revenue and cost drivers of the company and then analyze the industry structure to appreciate its attractiveness in terms of competitive pressure. You assess the revenue cost drivers of the industry. Well, no, that's not really true of CFAI and the CFA content. You're describing the difference between a bottom up and a top down. I think it's always better to do a top down and then do a bottom up. How can you possibly assess a company unless you understand the industry in which it operates in? And the industry is embedded in an industry group, which is embedded in a sector. I don't know that you can really understand one of these companies unless you understand something about the industry and the sector that it's in. So I think if you start at the level of the sector, move to the industry group, move to the industry, then the sub-industry, you already know so much about every company in that sub-industry, right? But the CFA material explains a top-down process as well. It's making you a financial analyst, not an economic analyst. An economic analyst will start at the top and work their way down. A financial analyst looks at the statements of a company. A lot of time spent looking at the statements. So, yeah, they will describe a bottom-up approach to forecasting. If I'm correct, could you explain why the difference? Just did. I live on a small island with no public exchanges. The sector classifications are very different. So given that I'm analyzing small private companies, I want to apply your approach. How do I even begin? Well, I mean, small island. I don't know really that there's a lot of. I mean, you got to tell me what small island it is. I really don't know, but I seem to think the bigger fish are in the bigger markets. How much runway is there on a small island? How many businesses are publicly traded? How many private businesses are even for sale on a small island? Considering Grok gets most of his data from X, I'm not all surprised at the outcome. Illogical lies, garbage in, garbage out. So somebody on, what's his name, Nate, something or other, I forget his name off the top of my head. He looked at Grok and noted that Grok claims to be number one on a bunch of metrics, but that it's overfit, that if you go to LM Arena, you'll find that this is rated 66th. 66! Not second, third, fourth, 66. Only because they overfit it to be number one on those tests. Because you can't release a model and say we're number three. Every model released has to say we're number one, we're number one. But I gave it another try. Getting it to do something, I thought, well, let's start with a simple prompt. Maybe it just needs to be prompted differently. And I kept trying and trying and trying, and no, it's so far away. It is so far away. It forgets something that is one prompt away, and you got to say, but I just told you this. And you gotta, it's just terrible. It really is a bad model. By the way, the email I sent in asking for a refund, zero reply. Absolutely zero reply. Somebody on the side read it and just said, delete. Fuck him. Screw it. Nobody gets a refund. Delete. Not even a reply. Not even a standard reply by a bot that says there are no refunds. Just delete. Ignore. Very, very bitter about that. Where the former two models may shine is in public sentiment, politics, and clown shows, which is the current market environment may be more valuable than fundamentals. I don't think so. I don't think anybody's using it for the clown show. Google has been collecting data on entire populations of people searching for everything from tennis shoes to quantum physics for decades. They have all the YouTube content, including yours, and they have scraped every book imaginable. Right now I'm seeing Google as one of the survivors of the hype cycle with Perplexity being assimilated. Dollar for dollar, really. Google Gemini is by far the best. I am eventually going to cancel all the other subscriptions I have because I don't need 6 models. Gemini looks like the clear winner, in which case I will go to the $340 a month version of Gemini to get access to more power and newer models as they come out. With that one, you get access to DeepThink, which isn't quite available in 2.5 yet, but it will be. I see no reason to be anywhere else. It is my go-to. And for just searching, just general questions that pop into my head, I don't Google anymore Perplexity. I love the output from Perplexity. I tried the AI search in Google, but it's not as well streamlined and defined as Perplexity. If you just have the Perplexity app, it's fantastic. Apple should pick that up. If expected growth in U.S. Treasury issuance placing upward pressure on bond yields. No, I don't think so. If so, in what ways, if at all, does this inhibit the Fed's ability to cut the Fed funds rate? It doesn't. I think the Fed is way too focused on the abundance of caution. And I think it's way too focused on tariffs. And they're forgetting their first year of grad school economics. The taxes reduce disposable income, and it's disposable income that you watch for demand pressure. And if you're reducing disposable income by the same amount that the price is increasing, I mean, duh, which is what you learn your second day in grad school is duh. They're forgetting that. Maybe they missed that day. All of them. Where would we leave off? If Trump forces the Fed to cut, creating a large delta between the overnight rate and bond yields, would this prompt banks to park spare cash in bonds and T-bills rather than lend to each other? Probably not. If so, presumably some institution would be deprived of needed overnight liquidity. No, I don't see that. Requiring the Fed to perform some sort of stealth QE to prevent systematic liquidity issues. No, I don't see that. Do you think concern about bond yields due to fiscal deficits is a primary reason why the Fed hasn't been cutting? Well, I think they haven't been cutting because of tariffs, and Trump yelling, cut, 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 you stupid idiot, cut, cut, cut. Now, if they cut, it looks political. So Trump has actually created the very conditions under which the Fed is most likely not to cut. It's actually Trump's fault. Try telling him that, though. Recently watched your options portfolio video. I have a question on managing portfolio positions, small brokerage account, say 5K. How can you have small positions playing options? You can't. You can't. Options are for 100 shares. There is no way to change that. 5K is really just too small. So when you have really small accounts like that, all you can do is take positions that match a delta. Let's say you want to buy an at-the-money call. It has a delta of about 0.5. Buy 50 shares, right? Just size it according to a delta, I guess. You could do that. You can use a put. This is sort of a very common way to replicate an option. Is you can say, well, what I'm going to do is I'm going to take a 40 delta put. I'm going to buy 40 shares. Right, here's how this works. If the stock starts going up, the delta on this put drops. Let's say it drops to 30. You sell 10 shares. Now you only have 30. So notice that you selling on the way up. It keeps going up. This delta drops to 20. You sell another 10 shares. Notice that you're trying to match the delta with the shares. What is this forcing you to do? Sell on the way up. Well, what if this started to drop? Well, then this would go to 50 delta. Well, then you buy 10 more shares. So you're buying on the way down, you're selling on the way up, buying on the way down, selling on the way up. It's a great way to play volatility. But you could just emulate an option. You don't have to own the option. You can just emulate the option by benchmarking to a delta. By the way, for those who are coming to Costa Rica in August and September, this is one of the techniques I will show you for stocks that have very high IV, how to benchmark to a delta. Regarding your comment about AI benefiting small cap companies, I think you're missing the larger structural problem that the Russell 2000 selects for stagnant, weaker companies that remain in the index, while higher growth companies graduate from the index. I think you're conflating the term growth with market cap, right? A higher growth company that is an $800 million or $1 billion market cap that has high growth is not going anywhere. So not really. No. The index is meant to be representative. There are entries, there are companies in the Russell 2000 that are in the S&P 500 small cap index. There are companies that are in multiple ETFs and multiple indexes that are in the Russell. It's not as if you're in the Russell, you can't be anywhere else. So you're conflating growth with market cap, and you're conflating growth with profitability. I just did a quick AI search in the last couple of years. Russell 2000 has lost Palantir, Carvana, Strategy, and others due to increase in market cap. So what? I mean, so what? So owning IWM longer term, you'll end up selling companies with the best future growth prospects and left with a mix of some small and profitable low cap growth type companies. No. There aren't that many that end up being like that. Is it a incubator for some very large company? Sure. I'm sure it is. But if you own the S&P 500 or the NASDAQ, you're going to end up owning some companies. If you do an AI search, you'll find that there's a bunch of companies that end up having to leave the index because they become smaller and smaller companies over time and they fade away. So I would say to you that I don't know why you're buying large cap indexes. Most of them, the companies in there usually end up fading away. So you're going to end up owning a bunch of companies that are going to start shrinking over time. It's the same result. You can do the same search just on the other side, and you'll find that those large cap indexes suffer the same thing. They kick companies out that are on the way down and bring new companies in all the time. So you may say a small cap is held down by that. I'd say, well, large caps are held down by the same thing. A stupid Q, bit of psychological. As a retail investor, I'm facing mental issues with tech stocks or ETFs. Mental or cognitive? Those are two different things, right? Everything seems overvalued. Okay, so that's not a mental issue. That's more of an intellectual issue. Everything seems overvalued, and for such I don't have exposure on that. I miss a lot of party. Nvidia looked overvalued to me. Even 120 QQQ looks overvalued. Same goes for many others. How can I get rid of psychological problem? Well, you're not really buying. You could be a value investor and say, I'm going to buy value, period. I don't care what anybody thinks, I'm going to buy value. Or you could say, I'm going to buy what everyone else is buying, right? That's momentum. You're not a momentum investor. You're not going to do it that way. You want to be a value investor. So a momentum investor just says, well, what's everyone else doing? Let me do that. A value investor says, I don't care what everyone else is doing. I would never pay this price for that thing. Simple as that. So yeah, and also if everything around you is overvalued, you might be looking at the wrong metric. All right, if you're looking at all the headline names, Facebook, Nvidia, Palantir, CrowdStrike, yeah, they're going to be overvalued because that's what everybody's buying. But that's the point, right? It's you're running with the crowd. Like if I wanted in the U.S., especially around the Bible Belt, if I wanted to sell something, it would be something Christian and biblical. I don't believe in that stuff one bit. I'm an atheist. But I do know that other people believe in it. So if somebody had an idea for this new product in the religious space and I looked at it, I said, I think you got something here. I'd probably invest in it even though I don't believe in it, because I know that a lot of people do. These things are going up because a lot of people believe in it. So what you're saying is that all I can see is momentum around me. Where's the value? With the Canadian apartment REITs being completed over the next 2 years, will that not have a negative impact on REITs? Well, I think the immigration under Trudeau really was the big boost for REITs. But if you look at immigration numbers, they don't match what the government says. Oh, we're going to hold back on immigration. Not really. That's not really what is going on. So no, I don't know that it would do much to hold back valuation. So let's take cap rate. We're above 45, which is nice to see. Down from below 40 to above 45. Still selling below its net asset value. With completed apartment buildings coming online, they end up being good targets for REITs to buy because now they're completed and they're ramped up. They're lower risk. If they're depressed in price because there's too many of them, what a great opportunity to buy for the future. No new ones are being built now, only ones that are being finished. So if you go out 2 or 3 years, you're going to have a deficit of units coming online. I don't see this going back to 65, but I think it could fight its way to the $49 to $52 range if we get some kind of relief from this, oh my God, the debt, the debt, the debt. If we get some relief from that constant cry. You know, you've had it seems every single day you got a gatekeeper, you know, standing here saying, is this good news or bad news? Is it good news? Okay, equity market, I got something for you. Is it bad news? Okay, bond market, I got something for you. Even if it's bad news for equities, this gatekeeper says, stop, stop, stop. No. All bad news goes to the bond market. All good news goes to the equity market, no matter what it is. The bill for stablecoins has been passed, and the demand for this is increasing. And this is T-bills, which will create a shortage of T-bills. Now the government can go to the short end of the curve and start issuing T-bills if the Fed will start to lower rates. But that's going to squeeze a bunch of people out of that particular market into the 2-year, which will squeeze them out into the 3-year. The 5, it'll squeeze it like a tube of toothpaste all the way down. And if the Treasury starts issuing more short-term T-bills with falling rates to take advantage of, in a year from now, rates will be much lower. So why lock in a 5-year, or sorry, a 5% 30-year? You will have a shortage of bonds being issued on the long end of the curve. Nobody's happy about that. Waller tonight said the job market is not as strong as what people think it is. You know, so you're getting more people on the committee that will infect other people around them. Right? It's not as if there are 19 people and 2 are in favor of cuts and no one else is. 2 are, which probably have a good probability of convincing 2 more people, which may have a probability of infecting the conversation that convince 2 more people. So if I have a belief that something is a certain way and I'm in a room with other people, I have a chance to speak and make my case. And if I'm pointing to data that we can all see, somebody else may say, yeah, okay, I see your point. Yeah, okay, you know, I guess I could go either way today. But no, the bond market doesn't want to seem to take that good news. Every time it shows green, 3 cents green, all I can hear in the background is sell, 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 sell. You know, and no matter what bad news the equity market gets, buy, 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 buy. I don't know about you. I don't know if you see the same thing I see, but you look at this every day and you think, okay, when is this going to end? When are we finally going to hit rationality and say, look, bond market is not that bad. It's not that bad. The administration the other day mentioned that they got out of June with what, a $25 billion surplus. And the bond market said, sell, sell, sell. It's like, well, did you not hear that? It seems the bond market only wants to hear the bad news and it closes its ears to the good news, and the equity market only hears the good news and closes its ears to the bad news. One of those 2 markets is wrong if they're doing that. I don't know which one. Do you get a feeling of grift from the all-in crew? Do I get a feeling of grift? Yes, I do. Are you kidding me? Do I get a feeling of grift? All that's left is not just for Chamath, but the whole all-in crew to start announcing that they're going in on a SPAC together, that they're going to start introducing SPACs like Chamath did when the SPAC thing was going crazy. He did 4 in a row, made money on them. Everyone else lost, and not once has he apologized. Not once has he said, listen, guys, I'm really sorry it didn't work out. Not once has he apologized. In fact, somebody called him on it, and he called that person names. That's a grifter. And are they grifting? Yeah. Chamath's history with SPACs is undeniable. Oh, okay, there it is. And Sachs is showing himself to be, I'm not going to say that word. Now they're pushing overpriced tequila on their fan base. Well, it's only overpriced if it doesn't sell, right? I mean, if it sells out, clearly it wasn't overpriced, it was underpriced. Value is what people perceive it to be. It's so weird coming from extremely wealthy people. I'm wary of them, and it casts a doubt on everything they say. I try to extract value from the podcast, but it's hard to do when everything they say could be manipulation or outright lies. Well, they're very far, I think, from where they started. I enjoyed their podcast because it gave me a view on the VC world that I just didn't have. Now they're talking about their opinions on politics. Well, who are you to have an opinion that's different than anybody else's opinion? Everyone's got an opinion. Everyone's just as informed as you because you're not. You're not anything more when it comes to politics than any other citizen out there, than any other taxpayer out there. So it's like, well, yeah, you got opinions, but I got opinions. It's like listening to movie stars' opinions about social issues. It's like, well, who the hell are they? They were in a movie, probably with very, very low level of education. Most actors are. And actresses usually have very low levels of education. They're not very bright generally. Why are we listening to them? It's because they're famous. We think, oh, well, they're famous. They must have something to say. But they don't. I mean, they don't. Really. So, yeah. I'm having a hard time with it as well. There are times I don't watch it, and there are times I'll watch the first 10 or 15 and I stop and I say, I can't watch this anymore. I can't watch this. It's not informative. It's not interesting anymore at all. I shouldn't say at all. Some parts are. Like when Freeberg has his science corner, and I can see it at the end. I scroll along the chapters at the bottom. I see that. I go to that because that's interesting. But other than that, yeah, I think it's an issue. I generally agree. Oh, this is the comment from the All In. I generally agree, but isn't this the case with most media? Yeah. I mean, Hawk Tua didn't take very long to cash in on her fame by putting out a coin. Trump puts out a coin. Melania puts out a coin. Melania sells her life story to Amazon for $40-some million. The Kardashians sell their stuff all the time. Who else does this? There's two brothers. They did some coin stuff. Jake Paul and his brother, they do that all the time. Set up phony fights, just, like the Tyson fight was just a setup. I mean, that just took money from everyone. It was just, it wasn't real. And, I sort of knew it wasn't going to be real, but yeah, they all do that. You're right. Talking heads on Bloomberg aren't any different. They go on and on, talk about their book and about how great they are and opportunities they're looking at. Yeah. FWIWCP is my least favorite, with Freeberg being excellent and the only objective thinker. Oh, for what it's worth. Okay, Chamath. Yeah, I don't like Chamath at all because of that SPAC thing. I mean, to do that, and I'm pretty sure he knew that what his payday was, and I don't think he really cared if anybody else had a payday. I'm doing this because I want to share this idea. I want people. It's like, that's bullshit. You're doing it for, anyways. I don't like people who do that. Who want to sell you something, knowing what their end is, but knowing that all the transaction is going to do is transfer money from you to me. And that's really all it's going to do. It's not going to help you out one single bit. It's not going to make you any better. It's not going to deliver any value. It's just a transfer of wealth from you to me. I can't stand people like that. Just trying to better understand. Michael Saylor. Well, Saylor, I got some words for you, man. Actually, Saylor understands. He just thinks that everyone else doesn't. Everything you present about copper so far makes sense. Declining ore grades, constrained supply, growing demand from traditional line. Okay. But in the Shades of 99 outlook, you use that great analogy from the California gold rush, where even tools and equipment suppliers were insolvent once the hype faded. You related that to the current AI cycle. Okay. Putting both arguments together, do you think copper demand prices will have a drop-off once we hit the top of the S-curve, as copper being the supplies of the AI hype? Oh no, the demand for copper is not going to be swept up with hype. Either you buy copper or you don't. Either copper will be used or it won't. And the copper mines are really priced on the forward curve of copper prices, usually for about 2-3 years out. So if you want to price out a copper mine, you take we look at a forward curve of copper prices, and we'll price out copper on these for a number of years. And then usually you have some mid-cycle amount that you carry on. So the price of copper does not get hyped. It is a function of inventories. It's a function of smelter capacity. It's a function of supply and demand. So it is very close to its fundamental value, at least on the London Metals Exchange. Maybe New York has a different story because of the potential tariff built in. So it's not going to get swept up in the hype. What is going to happen is there's going to be a build out. There was a build out of the internet, but the stories of it went really crazy. So Cisco went way up, way beyond its fundamentals, and it came right back down, but it still continued on with the building of the internet. Copper will do the same thing. Copper doesn't have this. You're not going to get this kind of thing where people are willingly paying $8 a pound for copper because of the story. Not unless they're preemptively, massively building inventory to get ahead of it. So copper will be priced based on its actual use. Whereas this model, or NVIDIA, well, how long is the build out going to go? Oh, I don't know. You could tell all sorts of stories about what the future is going to be. Same with all the models. There's no limit to the stories that you can tell. And where is the limit on it? Where is the no arbitrage price for that stuff? Doesn't exist, right? This whole futures curve, all of these are no arbitrage prices. And if you, and it's a commodity, so it's based on commodity pricing. NVIDIA is not a commodity supplier. There aren't 15 mines around the world producing NVIDIA chips. There's only one NVIDIA, so who knows where it can go, right? Say we believe that volatility is oversold. All else being equal, is that bullish or bearish for low vol stocks relative to the rest of the market? Well, I don't know that I would say if you think it's oversold, it's bullish or bearish. Lower volatility tends to be bullish. Higher volatility tends to be bearish, or said another way, bearish action in the market tends to raise volatility. Bullish action in the market at the level of the index tends to lower volatility. My intuition is that volatility being oversold is synonymous with protection against volatility being undervalued, well, I guess, which in turn means that stocks offering low vol are undervalued. I can't make that connection, but it's a bit of a mind twister. You're telling me another way to say the same thing. Well, volatility is oversold. You may as well buy volatile stocks. Why? And the undervalued protection, and ignore low vol stocks, which would lead them to being undervalued. Okay, you'd have to explain to me. You'd have to draw out all the steps you're making in getting to those conclusions. The bid to cover is over 2x for long-term U.S. Treasury. Since the demand is high, why doesn't this drive down rates? That's good news. The bond market doesn't get any good news anymore. Good news dies in the street. Only if it's bad news does it get into the club. I'm going to Costa Rica in 2 months. Woohoo! What would you recommend going over from your website in order to maximize my time there? It's not important. Looking to watch almost 35 hours of content next 2 months. Access to everything. Context. I have passed all 3 levels of CFA, working in long-only equities. We don't do options. Our average holding period is about 5 years. Seems like doing portfolio construction section will be time well spent. I think so. Maybe some options. Yeah, I agree. Have you checked out Finance Dashboard of Perplexity? I have, where you can find a lot of info, especially the earnings calendar. Yeah, I have, but if you look for a particular company, get the 10K and look at Perplexity, and you'll find that lots of mistakes, lots of numbers that are wrong, lots. So I don't know where it's getting its data from, but it's not paying for it. And it has no analysts that are cleaning up the data, so it's scraping and then just saying, here's what we've scraped. And I think it's adding things together that shouldn't be added together, or presenting the wrong numbers. I asked it what the market cap of, what company was I looking at? I asked what the market cap of this company was. It said $8 million. Okay, stop. This is nonsense. It's not $8 million. Pointed out the mistake, and I think it came back and like raised it by like 4 or 5 million, but it was still way off. It's like, it's okay, enough of this. It's not ready. Whatever it's getting is scraping data from somewhere, but it's not doing a good job with it. What does it mean when you present IV of the 13 week as a percentile? It means if you look at all over the last 13 weeks, if you look at all the daily implied volatilities, and we say 90 percentile, that means it is higher than 90% of all the observations in the last 13 weeks. Are all your price action charts from IBKR? All my charting, yeah, IBKR. One said in an interview that markets is like a money making machine. It is. Just wondering, is this because of your exceptional metacognitive skills and expertise? Just the experience you have. I mean, you can treat the market as a lottery ticket if you want, as an endless supply of lottery tickets. You can treat it as a set of very risky bets. But if your goal is to just make money, then your goal is to get on first base. With everything you do, you're no longer swinging for the fences. Your goal is to get on first base. There's a lot of single base hits out there that'll get you on first base. A lot. If that is your goal, is to make money, then you're not swinging for the fences anymore, right? When you buy a lottery ticket, you're swinging for the fences. You're looking for that big home run hit. When you treat it like a risky asset, you're looking for the doubles and triples. You're not interested in the singles, doubles and triples. When you treat it as just, I'm going to earn a living on this thing, well, then you're looking for singles, maybe doubles, singles and doubles, and patience. If Trump asked you for a piece of advice about life or politics, what would you tell him? Piece of advice about, well, I wouldn't tell him anything about politics. I think he's got that down just right. For politics, you got to be a liar. You have to be two-faced. You have to be a hypocrite. There's not a single politician that isn't a hypocrite. When they do it, it's bad, but when I do it, it's good. And that's politics, right? And you got to be a liar. And you got to lie to people, not because you believe the lie, but because you think people are so stupid they'll believe your lie. You have to think of everybody else as really stupid, and then you got to be just a nasty human being, ready to slice the person's throat beside you, and be a hypocrite. So Trump fits in with politics very well. Why he wasn't drawn to it sooner, I don't know. So I'd give him more advice about life, and I guess the best advice I could give him is to try to be as big a man as the role you're in. There's no need to be this small little petty man that has to keep reminding people how smart he is, how good he is, how he got cheated, how everything was rigged, how he never loses, how everything's the best, having to point out, articles that were glowing about him. Did you hear what they said about me? You know who won the tournament? I won the tournament. It's like a little 5-year-old, always looking for validation from dear dad and never getting it. But you have the biggest role in the world, the U.S. presidency. Try to be as big a man as the role you're in. I guess is what I guess that would be my wish for him, is that one day he wakes up and that he becomes as big a man as the role he's in. But until then, the advice I would give him is, dude, you've won. Enough with the grievances. Let it go. You have the highest office in the land. History will write stories about you. You don't have to tell people to write stories about you. You don't have to tell people that history will write stories about you. Let it go. Let it go. I guess that's what I would tell him. I think he'd die a happier person, but I think right now he's set to die a very miserable person. I think his last few words will be about how no one has been persecuted as much as him. I think that's sad. Anything about neoclassical, neoliberal, and rebel economists? That's a new one for me. What is the difference between general economists and these people? That's a seminar. I think you can ask Perplexity that, or you can ask AI that. You don't need to ask me. Thoughts on economists Stiglitz and Krugman? Do you find their views worthy of your time? Well, there's political views and there is, rigorous economic scholarship. They've both done very rigorous economic scholarship within the schools of thought and within the domains that they work in. So, as far as in the academic world, hats off to them. And most other academics would say, yeah, you got a Nobel Prize winner in there, for God's sake. Stiglitz in the literature is a giant in there. So these are giants in their academic field. But I don't care what kind of prizes you have. You do not have any monopoly on political opinion. And when you start expressing political opinion, then you're just the same as the guy down at the coffee shop saying all these guys are a bunch of crooks. You're saying, it's just the same thing. They're just opinions, right? So, but on policy, I'm sure they have some views on policy that align with their ideology on how an economy should be structured, which is informed by their scholarly work. But let's be clear, for as many economists that are on that side of the line, there are just as many economists on this side of the line. For as many economists that say a higher minimum wage is good, there are just as many saying a higher minimum wage is bad. You can find an economist, no matter how crazy a political idea you have in terms of economic policy, you can find a group of economists that support you. Always. I think you need to copyright your voice and face. These scammers are gonna. You think scammers are gonna stop? Oh, he's got a copyright. Shit, we can't use it. We can't use it to impersonate him to steal money because he's got a copyright. You think they give a shit about a copyright? Not one bit. Not one bit. Listen, there's just going to be more of this shit going on. There's going to be a hell of a lot more of this shit going on. So it's not on everybody to try to shut down everybody who's impersonating them. It's on everyone else to recognize, does it make sense for this Meldrum guy to be hitting me up on Telegram or WhatsApp asking me for a $3,000 investment in some brokerage account? Do I seem like the kind of guy who's going to do that? So if I'm coming across as too talkative, if you've ever received an email from me, it's like 1 or 2 word answers. If I'm coming across as too talkative, I can tell you right now, that's not me. I can tell you right now, that's not me. I will never ask you for money for an investment or to invest money in an account that I'll manage for you. I will never do that. So if anybody seems out of character to you for any name, always go back to the source and say, was this you? Do you think the market overpriced the Apple and MP Material deal? What are your thoughts on MP Materials? Like, do they have the moat for rare earth given the company operates the only rare earth mine in the U.S.? To reiterate this point about why they're called rare earth, they're not rare in the earth. They're not rare at all. There's lots of this stuff around, but it's very difficult to process. That's the problem. That's what makes them rare. Is we should probably call them rare minerals, not rare earth minerals, because they're not rare in the earth. Rare should be the end product, right? But the prevalence of it within the Earth's crust does not suggest in any way that they are rare. It's hard to process. So does it have a moat? Well, I don't know. You'd have to look at does it send its concentrate to China to have China process it? If it does, it's not a rare earth company. China still has the monopoly on that, because unless you can process it, any company can mine it out of the ground. You gotta process it. That's where the moat would happen to be. Can they process it? Do they have an efficient processing system? If they do, then that's something. If they don't, well, buy it from China. What do you think may happen in Jackson Hole on the 21st and 23rd of August? I think a whole bunch of central bankers are going to gather and talk about stuff. I think Bloomberg and CNBC are probably going to report from there. That's what I think is going to happen. Same thing happened last year. I don't know what they're going to talk about. I don't know what they're going to say, but I think a big topic of conversation is going to be the level of rates in the U.S. You can say that the deficit is on an unsustainable path, or you can say that interest rates are at an unsustainable level. To me, right now, those are equivalent statements. So, can you rely on your politicians to balance a budget? Not with the type of democracy we have today, which means the heavy lifting has to be done by the Fed, and the Fed has to recognize that in today's world, this is a variable they have to consider. The cost of the debt, they have to consider that if they're looking for economic growth in the future, or they want to encourage the economy to grow at its potential. You can't keep extracting all this disposable income out of the economy to pay the interest expense. They must begin to start to think about an expansion of their mandate to include this variable, perhaps. But other than that, I don't know what's going to happen in Jackson Hole, other than a bunch of people are going to get together in an overpriced venue with a lot of security, with a lot of media, and a lot of interviews. Then the market is going to go up, and then it's going to go down because this person said that. Then it's going to go up because this person said that, and it's going to go down because this person said that. And they're all going to wait for Powell, and Powell is going to say, we're in a good place, blah, 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 blah. That's it.